This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending November 26, 2022. Our question this week is, what are reserves? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.45% on Friday and was up 1.78% for the week. The S&P 500 decreased minus 0.03% on Friday, but was up 1.53% for the week. The Nasdaq decreased minus 0.52% on Friday, but was up 0.72% for the week. Looking at the week, we can see that there were 7 up finishes versus 5 down finishes for the major indexes. On Monday, all the major indexes finished down. On Tuesday and Wednesday, they all finished up. On Thursday, the market was closed, and on Friday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. The new unemployment claims were 240,000. The rail union Smart TD voted to reject a labor deal. Investors' home purchases dropped 30%. Mortgage rates edged down below 7%. Mortgage demand rose 2.2% as interest rates declined slightly. From the Fed minutes, we learned that Fed officials indicated that smaller rate hikes are coming soon, and U.S. Treasury yields, after dropping early in the week, only declined slightly on Friday. New unemployment claims, a potential rail strike, investors' home purchasing dropping, mortgage rates dipping below 7%, mortgage demand rising, the Fed indicating lower interest rate hikes will be coming soon, and U.S. Treasury yields falling are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are reserves? In accounting and general business, reserves are the amount of money that a company holds that is not to be used to distribute dividends or buy back stock. A company reserves are to be used for specific reasons like retiring debt, purchasing fixed assets, paying bonuses, etc. A company's reserves assure creditors and investors that a company has the ability to remain in an ongoing concern and expand the business as well as pay their debt. In banking, banks' reserves are the cash minimums that financial institutions must have on hand in order to meet central bank requirements. Reserves are the actual cash that the bank must keep in its on site vault and held in its account at the central bank. The central bank, which in the U.S. is the Federal Reserve System, dictates how much must be held in reserve. Historically, the Fed has set the reserve requirements from 0 to 10%. Currently, the reserve requirement is at 0. Proof of reserves is related to crypto exchange platforms and other holders of crypto assets. Crypto holders must show that the holder has enough assets to match their users' deposits so that if the users want to withdraw their assets, they know that they will actually be able to get their assets back. When companies don't have reserves, they could be in danger of being over leveraged, that is, having too much debt and not being able to meet their debt obligations. In the case of banks and crypto exchanges like FTX, they these crypto exchanges kind of act like banks, uh, having too many depositors demand their money back at the same time uh, could cause a run on the bank or on the crypto exchange. A bank that does not have the money on hand will not be able to give depositors their money back. And a crypto exchange like FTX and others may not be able to return digital assets to their users. The news of their inability to pay will cause more depositors or users to demand their money back, and of course, the bank or crypto exchange will not be able to provide depositors or users with their funds or assets. Soon, like in the case of FTX, bankruptcy will follow. Does your bank hold reserves? How about your crypto exchange? Or companies of your stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. Schools taught you how to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the US financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is the Southside Trading Watch List from the week ending November 26, 2022. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC, in the third column. It was down minus 2.17% on Friday, but increased 8.14% for the week. Grayscale Bitcoin Trust is an investment vehicle similar to an ETF that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safeguarding Bitcoin directly. Looking at a summary of results, you can see that Grayscale Bitcoin Trust has decreased almost 74% year to date. I own Grayscale Bitcoin Trust shares. I do not generate cash flow from them because Grayscale does not have option contracts. I use options to generate cash flow from stocks. I use Grayscale Bitcoin Trust as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 index ETF SPY. The Southside portfolio is up 3.63% versus minus 15.29% down for SPY, a difference of 18.92%. The Southside is beating SPY by more than 15%. By more than 18%. The cash flow generated by the Southside cash flow system for this week was 5.09% of the portfolio account value. The account value changed by 0.87%. Meanwhile, the S&P 500 ETF SPY changed by 1.59%. Bitcoin watch. Bitcoin lost minus 0.74% this past week and continues to be in a bear market. It is down minus 76% from its all-time high achieved in November 2021. I sold option contracts on 3 positions this week, 1 call and 2 puts that range from $29.35 to $84.69. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of Financial Freedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. Level 1 being for beginners, level 2 for intermediate, and level 3 for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.